Anyone else want to buy a big newspaper? Because these things are going like hotcakes. Investor Beat starts now. Thanks for watching. I'm Chris Hill. The stock market falling this afternoon thanks to the comments from Dennis Lockhart. The president of the Atlanta Federal Reserve Bank said the Fed could start cutting back on its bond buying program as early as next month. IBM not helping matters as Big Blue fell in the wake of a downgrade from Credit Suisse. Joining me in studio today, David Hanson and Jason Moser. Guys, our top story. Jeff Bezos, the founder and CEO of Amazon.com, is buying the Washington Post for $250 million. The news was a surprise for several reasons, not the least of which was the fact that the Post has been run by the Graham family for the past 80 years. It's an amazing run that has come to an end. Is this ultimately good for the Washington Post and the people who work there, though?
Wait a minute, Bezos is buying a newspaper?
Yeah, you may have heard a little something about this.
No, okay, yeah, I did hear about it. Actually, it was really interesting. I think we saw it first thing yesterday on Twitter. He got out very quickly. You know, it's an interesting deal. I think that Jeff Bezos, a lot of people don't really understand how much of a long-term thinker this guy is. And he's truly, I think, one of the great thinkers of our time. He's certainly a big risk taker. And that sort of translates, I think, and people either think he's just sort of recklessly spending money with Amazon and he's not interested in making profits. I choose to look at it a little bit differently. I think he's building out an unbelievable distribution network with Amazon. And so I think that this, with the Washington Post, he sees a troubled brand that's been having a lot of trouble sort of making its step into the 21st century, and Jeff Bezos has really done a lot in making those steps into the 21st century. So he sees a brand in trouble, a reputable brand, and he wants to be a part of it. He and Don Graham have a little bit of a friendship going back, and so this is an opportunity for him to try something new and maybe get this media outlet moving forward.
And Jason mentioned Twitter. You look at some of the comments on Twitter from Washington Post employees who, some of whom seem pretty worried about this. Mm-hmm. Should they be?
I think it was probably a knee-jerk reaction. I think it's a vote of confidence. If Jeff Bezos, one of the richest guys in the world, one of the most innovative guys in the world, comes in and buys your company, and he's not coming in and changing the day-to-day management. He's buying this as kind of a long-term strategic vision. He can put in his points when he wants to, but he's not shaking it up too much. I think it's a vote of confidence for the Post.
I've said before, as an Amazon shareholder, the only time I get nervous is when I feel like the CEO is distracted, and now Jeff Bezos has a new venture. Is this a slight negative for Amazon and its shareholders?
It could be. I mean, I appreciate your thinking there, but I think that what David said made a lot of sense. Is that, you know, he is looking to take this newspaper into the next century, and really he's not going to be getting in there shaking up management and changing the way things are done yet. He went in there, he's going in here, basically doesn't really know what the vision is yet. It's going to be, he's going to learn, I think, a lot about this along the way, but management's going to stay in place. He's going to stay on the West Coast, and I think it's going to be something that as time goes on, he's going to play some small bets, and this is going to be something that plays out over the next few decades probably. So it'll be fun to watch. I don't think it's going to take his eyes off that Amazon ball.
All right, let's get to some of the day's movers and shakers. First quarter profits from Michael Kors rose 82%. Kors also raised guidance for the full year. There's a lot of nice numbers coming out of Kors.
Pretty unbelievable. 27%, over 27% same-store sales. That's just unheard of. They almost can't open stores fast enough to capture some of this growth. I mean, you look at the stock, it's been on a tear. The company's performing very well, so it's been a great time for Kors.
Shares of the Washington Post company rising on the sale of its flagship newspaper. The media and education company will also be getting a new name soon. Shares at a 4-year high. Should people maybe jump in here, or what do you think?
Well, you know my philosophy. I tend to not buy in on these big pops, but I mean, this does make a lot of sense because now they're going to get this newspaper property out from under that sort of company holding structure there, and they're still going to have the education in Kaplan, and they're going to have their cable properties as well. And that's really where the money is made with this company to begin with. And so I think that really the stock is reacting appropriately because it's kind of like a new day for Washington Post or whatever they're going to be named.
American Eagle reports second quarter earnings in 2 weeks, but shares fell today after the company lowered guidance for those earnings. Teen apparel, it's really tricky out there, David.
Remember everything I said about Michael Kors? Huge same-store sales. The opposite is true at American Eagle. They expect to be down 7%. The stock is obviously a little bit cheaper now, but this is not something that I'm rushing out and buying today as a value play. Not very interested here.
It's not the only one having a bad day in the apparel retail space. Urban Outfitters among those getting swept up in the damage of American Eagle. You look at the stock, particularly this year for Urban Outfitters, really a roller coaster.
Yeah, and I tell you, they just decided to join that party there with American Eagle, and there's all you can say about it. I mean, the problem with teen retailers is they are based on a very fickle audience. So when you look at retail in general, you look at something like the Gap, for example, where they have a number of different brands under that umbrella. No such luck really with Urban Outfitters. I mean, they do have Anthropologie and a couple of other names under there, but they have a little bit more exposure to that teen retail sector, and so they just decided to join today.
All right, that's going to do it for today's action. Let's look ahead to the rest of the week. Jason, what's the stock you got on your radar?
Going to be looking at Markel. Earnings come out tomorrow, and we're a big fan of Markel here at the Fool. Have a chance to get down to their annual meeting every year. Phenomenal chief investment officer in Tom Gaynor. So I'll be looking for two things really, just to see how their investment portfolio is performing, and then just to see how this Altera acquisition is sort of being integrated in the operations.
All right, David, what about you?
I'm going to be looking at shares of Freddie Mac. So these shares are not traded on the New York Stock Exchange. These are over-the-counter shares that investors can still come in and buy. And of course, Freddie Mac, Fannie Mae, both returning to profitability this year. These shares are under a lot of speculation. It's kind of a day trader stock. I don't think this is something foolish investors should be invested in for the time being, but it'd be interesting to see just how profitable Freddie Mac was this past quarter.
All right, for David Hanson and Jason Moser, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.
People on the show may have interest in the stocks they talk about, and the Motley Fool may have formal